Yo, what's good, y'all? Well, Scott, Chris. So check this out. The market went crazy today, right? So good thing we were in SPY puts and Apple puts. So the name of the game is to be able to trade from both sides when the market goes up and when the market comes down. So the purpose to me of trading is to build cash, get enough cash to fill your investments, right? So I have a saying that quick profit becomes forever profit, right? Or quick money becomes forever money. So you get money analyzing the charts, getting in your trade, getting out of your trade, taking that money that you just raised and funding your long-term investments. So CPI came out worse than they thought, for sure, than they thought, and it brought the market down, right? So I'm going to talk to you guys about why I was in SPY puts and why I was in Apple puts, because I got into these puts before the CPI numbers came out the day before. I already thought the market started heating up a little too much. So anyways, I made like 12 grand in total off of it. Crystal made $19,000 off of it. People in the Wealth Squad 8 and off those SPY puts, man. That's what we're gonna do. We're gonna trade both sides. When the market goes up, we're gonna get this money. When the market comes down, we're gonna get this money. Best believe that. So check it out. Let's talk about these Apple puts that we banked on. All right, hold on. Here we go. So here was the original call for the Apple puts. So yesterday morning, being risky here, 162 Apple puts. The contracts were, contract price was 109, and the expiration date was September 16. So the reason why I like these, if you take a look at this 15-minute chart, so you know the strategy, right? We're looking top of the price channel and then extreme hot RSI. But especially if you see the same thing on multiple time frames. So this is a 15-minute chart, right? I mean, this is what, 11, almost noon. All right, so here's what I mean by that. We're gonna pull up Apple. So a 20-day 1-hour chart. All right, so what we had was yesterday. Boom, 11. All right. So what we had yesterday was on the 1-hour chart, we were at the top of the price channel plus extreme RSI, right, which is above 70. Above 70 on the RSI is extremely hot, and then below 30 is extremely cold. So if you look at a 1-hour chart at that 10, 11, 12, so 10, 11, 12, those are those bars right there. We're at the top of the price channel, hot RSI. Now, if you go down to, let's say, a 30-minute chart and find that same time frame, you're going to see the same exact thing, right? The RSI is hot this whole time. We're at the top of this price channel. Then if you come down to a 15-minute chart, you'll find the same thing. All right, this is all of yesterday. So imagine none of this was here. All right, so let's head back to Discord. So this is what I was trying to do. It's on the 15-minute chart. I'm just trying to catch. I was trying to catch the fall, but I knew that the SPY pumping, Apple pumping is going to keep the SPY pumping, and SPY pumping is going to keep Apple pumping. All right. Now I knew that CPI was coming. The CPI numbers was coming. Right. So I knew that will work in our favor. So I think that we have more than enough things to work in our favor to take the risk, to justify or quantify the risk, right? So what I mean by that is we were sitting at the top of the price channel on a 1-hour chart, on a 4-hour chart, on a 30-minute chart, on a 15-minute chart, on a 5-minute chart, on a damn 1-minute chart. We were just sitting at the top of the price channel. On top of that, we have extreme RSI. And then the third thing is we have CPI coming out. And if CPI doesn't show, we don't show, so CPI is a consumer price index. So that shows, allegedly, it shows the cost of goods and services. Okay, it shows the cost of goods and services as it relates to inflation, right? So if we have anything other than we're getting this thing under control, right? If we have anything that even shows doubt, the market's going to pull back, because what you have to consider in the market is that somebody out there is in profit and they want to lock in their profit. They're in profit with Apple because Apple's sitting at the top, right? They want to lock in their profits. Once the biggest sellers sell, then it creates a sell-off, right? So selling pressure is what is going to create the sell-off, right? So the biggest seller sells, the price will come down, which will trigger somebody else to sell, or maybe somebody went long, or maybe somebody gets a margin call, and then, you know, the price coming down creates more room for the price to come down. So the reason why we took the risk, and like I said, it's a risk, being risky here. The reason why we took the risk is because we had those things in our favor. All right. So, also got into these NIO puts, which didn't really amount to much. All right. And then I had SPY puts from the previous Friday, right? From last Friday, I had SPY puts that I just held on to. All right. And I can show you guys. Let me see. So last Friday was the 9th. Look at this. On Friday, I made 10,000 from Apple calls, and then turn around and hit for 8,000 on Apple puts today. Oh, here we go. These 406, 916 SPY puts. It's hot on the 15-minute, the 1 hour, and the 4 hour. Bought these contracts for $4.81, right? And I had 20 of them. So we got a 1 hour chart. We're sitting at the top, right, of the price channel, hot RSI, and then the market turned around and kept running. So I just think, like, you know, whenever the market's sitting at the top, we just need any little excuse to create some panic, and then the panic will do what panic does, which is creates a frenzy. All right, 4 hour, 1 hour, just sitting at the top of everything. So I held on to these. All right, so I held on to these from last Friday. So what ended up happening was this morning when the market opened, in which I should have held on to them, but this morning when the market opened, the SPY puts, right? So they were what, 481, and then market open they were 726. So I made like a cool $4,800 off of those, and then those Apple puts made like 4,100 off of those, 82% return. Now, check this out. If I would have held, let me show you something. If I would have held those Apple puts instead of selling right when the market opened, maybe I should have scaled out of them, but I was like, nah, I'm not even gonna take no chance. Those puts are 655 right now. Right, so Apple, let me show you. Watch this. Let me learn you something, look. All right, so peep. So those contracts, the last trade before the market closed were $6.50. You see this, $6.50? So imagine I would have not sold. All right. So I'm getting them for $1.913. All right, it has a multiplier of 100, and then I have 46 contracts. Boom. So that's how much I spent, right? 5019. All right. Now check this out. I spent 5019. All right. The last trade at market close, there were $6.50. All right, times that multiplier of 100 times 46 contracts. Right, 29,900 minus that 5019 that I spent, and this is what my profit would have been. I would have been up $24,000 if I would have let it play out through the whole day off of that $4,000. But it's all good though. I took my profit and just got loose. I just got low. I said whatever. All right. So and then I had these two. So this would have made me like another. This would have made me another decent amount right here. But all good. So I made like 8,500 here, 8,000 there. So that's about 12,000. And then another $4,000, about $6,000. And then Crystal had follow me in. So boom. She made her 19,000. She would have made even, what I say they were worth right now, 650. Look at this. Watch this. They're worth 650 right now. Or the last trade was 650 times 100. All right. And she had 165. Jesus. Man. Man, oh man. They'd be worth 107K right now. It's all good. And then look, market success, man. So today was a good day. So I want you guys to understand, the main thing I want you guys to understand that is not just, I guess it's going to say yesterday because we crossed midnight, but it's not just the CPI is why we got in, right? It's the chance of having a bad CPI plus the market sitting at the top of these, of our trading indicators. Right, we're already sitting at the top of these trading indicators that we use to look for the reversals. So we have more than one thing alarming us. So then we're like, okay, well, let's take a little risk, right? Because if CPI goes our way, then cool. If CPI doesn't go our way, the market needs to pull back a little bit anyways. Nothing will go straight up. All right, so look, Apple puts, he made 325. He made about $3,700. SPY puts, he made a good $1,900. He made a good $163. He made like $900, $1,700, $300. We're just buying and selling contracts, y'all. I made about $2,400. Oh, he was in calls with Ray. I think Ray got into these calls, so he made $100 there. 214, 229, $531 today. People are eating, man. People out here eating. $234 there, $251 there. $477 there, $1,700 for him. This dude went and bought a P90 with his profits. $1,100, $1,400. These are just different trades people are in, man. We just be out here getting to it, y'all. $940. These guys trading something else. I think that's City. So we got an options chat where people just sit and talk about that and about, different things. Chat goes on all night. Hop in here. See what they in here talking about. See what they researching right now. All right, so yeah, like I said, y'all, it was a combination of a few things, man. It's a combination of a few things. Right? If we're looking at a 1 hour chart and we're sitting at the top and we're like, okay, well, we know it's got to come out, even if the market is going to run. Let's go to a let me show you guys what I'm talking about. Look, if the market's going to go down, right, from this point over here to this point over here, it's technically down over this, over this period, right? Over this 1 year period, it's technically down. Each of these bars is 4 hours, right? So the market is technically down from this point to this point. But on its way down, it goes up and down, 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 up and down. What we're trying to do is when it's too low, right? When the market is too low, we want to buy our calls in, sell them when we get our profits, right? Or when we hit a resistance point. And then when the market is too hot, we want to buy our puts and then sell them when we, get our profits, reach the support level or reach the bottom of the price channel, reach the cold RSI. So the market's going to go up and down on its way up, or up and down on its way down. And we're trying to trade both sides of the trade so we can create cash, so we can go and buy income producing assets. All right. So, I just wanted to show y'all how that worked, man. Got us some money in these plays today.